Get some more perspective on today's big market story. S&P's warning on the credit rating of U.S. debt. Joining us right now from his New York office, Barton Biggs, the co-founder and managing partner of Traxis Partners, a hedge fund with more than $1 billion in assets. Barton, by the way, is the former chief global strategist at Morgan Stanley, where he worked for 30 years before he founded Traxis in 2003. Bottom line, we love talking to him. Barton, good to have you back with Matt and me. We just talked with Mike Arenstein. He doesn't seem too worried about the update from S&P on the United States. You're not too worried either, are you?
Well, I mean, it's not a reassuring development, but I mean, I think it was sort of a grandstand play by S&P. I mean, thanks a lot. At this point, they come out and downgrade the U.S.
It's certainly something that a lot of people, Barton, we've talked to today have said, maybe they're pointing out the obvious here, but it doesn't make a big difference, and why would we listen to them anyway? Is it, though, in your opinion, even though obviously you're focused here on Wall Street, a message to Washington that they need to really get their fiscal house in order?
Yeah, from that sense, I think it's a good thing. And the fact that the Dow and the S&P and NASDAQ broke so sharply after they came out and said that immediately, sends a warning to the politicians that there are going to be dire consequences if they don't get their act together. I sort of think they are going to get their act together.
What gives you that confidence? Because, Barton, we've seen these wranglings over the budget and the deficit before. I mean, what gives you that confidence?
Because I think that America's a great country, and that we have a system of government that is painful, but in the long run does the right things. And I think we're gradually, in our own stupid way, moving towards doing the things we've got to do, like raise taxes and lower entitlements. And the political dialogue is moving in that direction.
Can it be, though, at least for now, Barton, pretty disconnected from your strategy on Wall Street, your strategy in the market? I mean, does it make any kind of difference?
No, not really. I mean, frankly, I think the ominous development today occurred overnight, which was the strong statement by the Chinese that they're going to do whatever it takes to bring down their inflation rate. And I think a lot of people, myself are included, are afraid that they're going to overdo it. And they're going to end up with a hard landing in China. And China is, as you know, the second biggest economy in the world, and it's the world's locomotive. I mean, it's cranking along at 9%. We can't afford to have China go to 4 or 5%.
Do you think it would really go down to 4 to 5? I mean, Barton, with these moves, I mean, to me, it sounds like China's being somewhat responsible in terms of managing some of the growth, managing some of the inflation in that country. You don't see it that way? I mean, do you think they could really overdo it?
No, look, Carol, I agree with you. I think they are being responsible in doing it. I'm saying a lot of people are worried about it. Mm-hmm. And I watched your marvelous network last night from the Asian segment of it, and since I guess Charlie Rose is on vacation or something, and the people they had on there were who were Asian and who were the prominent strategists in Singapore and Hong Kong and so on. We're all very negative about what China was doing, and we're implying that China was going to do overkill, and that that the probabilities of a hard landing had increased significantly.
So is the news out of China then? If you're not too worried about the news out of the S&P on the U.S. today, maybe that's not impacting strategy. Is the news out of China, Barton, impacting your investment strategy at this point?
Yeah, it's making me nervous about my commitment to Asia, and it's making me nervous about my commitment to to stocks in general. And it's not just China. I mean, the Finnish election over the weekend was another disquieting development. So, everything's not. Have I changed my net long? Not really. But am I more disquieted than I was on Friday? Yeah, I guess I am.
Well, and to sum up, Barton, I have a viewer writing in saying, hey, all I'm hearing from everybody is that we don't need to listen to S&P, and a lot of people are still bullish. I heard someone, though, this morning tell Margaret Brennan that it's not the S&P warning that is causing the red arrows on Wall Street. It just sort of gives an excuse to people to sell, because clearly there are more sellers than buyers out there today.
Yeah, but Matt, I mean, you're a wonderful guy, but that's not the most profound statement in the world.
No,
when the market goes
but everybody we have, Barton, is saying, I'm not worried about S&P. I'm still a buyer in this market. Mike Ehrenstein just said he's putting money to work today buying stocks. But obviously, people are selling. I mean, what is causing the drops of 1 or 2% today?
Gosh knows. I mean, there's all kinds of day traders and these momentum-oriented funds and so on. So I have no idea what's going on. I mean, but we've had lots of days where the market's up 200 points on the Dow, and then it looks great, and the next day it fades. And the same way, vice versa. But when the market is down sharply, but there really isn't any follow through. So look, I'm not trying to forecast the market in the next 4 or 5 days. I'm just saying that I haven't changed my basic outlook.
Barton, 30 seconds. What would, at this point, make you change your investment outlook? Just quickly, if you could, for us.
I think what would make me most worried would be the continuing decline in U.S. existing home prices, and so signs that we had deflation in the housing market. That would really worry me.
Got it. Hey, Barton, thanks so much for spending some time with us. Barton Biggs there from Traxis Partners. We're going to take a quick